So the air is thick with anxiety as people wonder when the next shoe will drop. The stock market is volatile, businesses are struggling to stay afloat, and unemployment rates are rising. And depending on who you ask, the economy is in shambles and talks of a recession is everywhere. It's a time of uncertainty and the fear of economic collapse is palpable. No one knows how deep the rabbit hole goes and everyone is holding their breath, waiting for the worst to happen. The world as we know it is on the brink, and the fate of millions hangs in the balance, which is why now is the perfect time for the White House to announce plans for a grand tour, a multi-week and multi-state waste of time and resources where Mr. Biden is set to embark on a 3-week travel extravaganza stretching over 20 states to highlight his economic agenda and investments through legislation passed over the last year. Kind of like a, look what I've done, America. But this is no ordinary tour, folks. Instead, this has been titled the Investing in America Tour, and what is being disguised as an ambitious undertaking to educate the public on the Biden administration's accomplishments and prepared agenda moving forward. Think of it like clickbait for the White House. But I much rather prefer to call it what it is, folks. Hit the like button and drop a comment if you can guess what that would be. All right, so the tour is set to begin with a visit to a chip manufacturer in North Carolina, and over the next 3 weeks, the president and other administration officials are expected to visit numerous states, including Arkansas, California, Colorado, Delaware, Georgia, Ohio, Oregon, Tennessee, Vermont, Wisconsin, and about a dozen other states, too. The tour will overlap with a 2-week congressional recess, and lawmakers are expected to join the administration officials at scheduled stops. The purpose of the tour is to amplify legislative accomplishments from the past year, such as the CHIPS and Science Act, which boosted investment in semiconductor chip manufacturing and research domestically, as well as the Inflation Reduction Act, which was also a significant accomplishment as it lowered certain healthcare costs and created incentives for clean energy investments. But unlike the name would suggest, inflation was not actually reduced. However, the tour is not just a victory lap for the administration, but it is also an effort to draw a contrast between the legislation signed by Biden during his first 2 years in office and the efforts by House Republicans to claw back some of that funding or reform government programs. So you see, a White House official emphasized that the tour would reinforce what was at stake for hardworking families across the country if Republicans in Congress got their way and repealed the Inflation Reduction Act and slashed funding for manufacturing, research, and innovation. A fate America can't afford to allow happen at a time where we must sustain America's big tech engines of innovation. Because warnings of breaking up big tech companies may have unintended consequences for America's global competitiveness. An argument that while regulatory oversight is necessary, destroying big tech's ecosystem could hamper America's efforts to remain a world leader in new technologies. It is also important to note that the importance of sustained research and development (R&D) for America's big tech firms to remain at the forefront of emerging technologies, including artificial intelligence, AI, and quantum computing (QC). Being suggested that instead of using an axe, regulators should use a scalpel when regulating big tech, and we should focus on the importance of creating guardrails for specific technologies and avoid exploitive business models and AI oversight. Ultimately, the arguments that regulatory actions that undermine America's innovation capacity could hurt our nation's commitment to remaining a global technology leader. It is worth mentioning that as the tour was announced, public opinion polling showed a lukewarm response to Biden's performance over the last couple years, and the president's approval rating had dipped to 38%, down from 45% in February. Yet, despite this, the administration remained optimistic and maintained that the economy was in a strong position, and the public should not worry about a recession. The Investing in America tour, as they are calling it, is supposedly not just a grand spectacle, but a critical effort by the Biden administration to communicate its accomplishments and agenda to the American people. However, there is an old saying that actions speak louder than words. So perhaps we should focus our concentration on what is happening more so than what has happened. And not just flying around the country in private jets, patting ourselves on the backs for likes and votes, because there is a clear red flag, warning sign, and indicator hitting our economic market as we speak. Barron's reports diesel prices at the pump have fallen to their lowest in over a year. And while that's good news for consumers, it is bad news for the overall health of the economy. The decline in prices for the fuel suggests a gloomy outlook when it comes to the U.S. economy, which we must brace and prepare for. Product manager, editor, and analyst at DTN, Brian Milne, said, "Diesel fuel is ubiquitous in our economy, and that it's a critical component in industrial production and, most importantly, supply chain dynamics." Brian Milne is the energy editor and a product manager with DTN. Milne manages the refined fuels editorial content, spot price discovery activity, and cash market analysis for DTN's energy segment. Milne and his team communicate with suppliers, brokers, and fuel buyers in the bulk wholesale market in refined fuels throughout each business day. DTN, based out of Minneapolis, delivers accurate, objective, real-time, and actionable insights to increase customers' confidence and support their business decisions. In a data-rich world, their actionable insights in weather and financial analytics make sense of the information, drive change in processes, and help businesses prosper. They empower our agriculture, energy, and transportation customers, those who work endlessly to feed, fuel, and protect our world. So, a weaker demand, however, has led to lower diesel prices, and U.S. government data show diesel demand in the first 10 weeks of this year down 12.6% from the comparable period in 2022, all according to Milne. And with the steep drop in demand due to slowing growth in parts of the economy, especially for heavy industry and construction, and he says that this slowdown is further pressured by higher interest rates and the recent bank failures, increasing expectations for a recession. Now, on March 22, according to the AAA, U.S. retail diesel prices averaged about $4.28 a gallon, down from $5.04 a year ago. Lower costs for transportation, yes, but a byproduct of lower demand for economic growth. But perhaps this is the challenge we all need to prepare to struggle through, which will potentially translate to a reduction in GDP, job cuts, slowed growth, and a substantial pullback in infrastructure. As we haven't heard much about fuel reserve levels here recently, yet stocks remain critically low. And analysts have warned that while the oil embargo against Russia would not have a significant impact on the markets, the same could not be said for fuels, as every economy depends on diesel, and global diesel stocks were already critically low. Although U.S. crude oil exports to Europe have increased and winter storms have caused a decline in fuel production, the economic slowdown has prevented a diesel shortage in both the U.S. and Europe. However, any increase in economic activity could deepen the imbalance between supply and demand, fueling further inflation. Therefore, the situation is precarious, with the U.S. economy stuck between inflation and the threat of a recession, and opinions on the possibility of a recession are split. But diesel consumption is a critical indicator of the economy's direction, with the potential for a natural or artificial recession looming. As diesel stocks are still critically low, any pickup in demand could cause prices to spike, leading to further inflation. So as a result, refiners need to significantly increase distillate fuel production, but this is unlikely to happen unless there is demand for those fuels on the market. And so, as you can see, and to sum it all up, the state of diesel suggests that there is still pain ahead for the U.S. economy. Save your money, folks. Tighten up your budgets, eliminate any unnecessary spending, and prepare to hang on, because this is the beginning of what could likely be the possible start of it all. The end as we know it, and the folks in Washington don't even have a clue. They are embarking on a journey that is quite possibly lighting the fuse on total economic pain and despair for millions and millions of American people. Prepare for the Fed pushing higher interest rates, banks buckling as depositors withdraw billions, and the U.S. Treasury, FDIC, and Biden administration all standing in front of their podiums and reading their teleprompters to inform and instruct us all to remain calm and don't panic. Yes, taxes will increase and money will be sucked out of your paychecks to offset the costs of bailing the banks out, because apparently, folks, this is how capitalism works.